nifty. So that one is the real big mover of the day. All right, now Vinit Sambre is our market master of the day. He's head of equities at DSP Investment Managers. Vinit, great to have you with us here. Thank you very much for your time. I mean, you know, you fall but fall less. So that relative outperformance is still very much here. And no real panic, right? Global markets are jumpy and panicky, but here there is relative calm and that almost a feeling and assurance that things are going to be okay. We'll ride out of this not too badly, Vinit. Is that likely to play out in your opinion? How have things changed, your view changed since the last time we spoke?
Yeah, good morning, teams, CNBC-TV18, and thank you for having me on the show. So I think broadly, we've been watching the macroeconomic factors, which are currently slightly adverse as far as the global markets are concerned, and Indian markets, like you said, have been pretty resilient. When we look at the performance, even YTD. I would imagine that there is definitely in terms of our overall macroeconomic outlook, it seems that relatively we are on a better scale. If one takes a slightly longer term view, most of the policies which we have been more favorable as far as the Indian economy is concerned. So from that perspective, I think some bit of outperformance is warranted. But given what is happening globally and things are turning a bit more adverse at the margin right now, again crude has gone back up. The Russia-Ukraine concern seems to be aggravating. I mean, all those things definitely can create some more weaknesses, both at the global level and at the India level. But one thing this actually also makes us feel that this type of market, which is not a raging one-sided market, is a good market for the long-term investors. You need some consolidation. We've risen for the last one and a half year, and since the pandemic, and the last 1 year we've been consolidating. So I think that's a good phase. I would say some bit of consolidation weakness because of the global macros allows the long-term investors to work with a more patience, look at good businesses, good companies, and invest with a long-term horizon. So I would say some bit of more consolidation, stroke weakness likely in the Indian markets given the global context, but the long-term view remains intact as far as India is concerned.
Okay, by the way, TCS is definitely seeing buying on dips. It's now moved to the high point, up about 0.5%. The low that TCS hit was 3,086, and now it's back above 3,130. So the dips are getting bought. What are your thoughts on the IT space? I mean, we've just got the first of the earnings, and it doesn't look too bad, Vinit, given the context of the macro challenging situation. Would you buy these stocks given that there is valuation comfort, or would you wait and watch?
Surely, Sonia, I think what has happened in the last, the last year to date. We've seen good correction as far as the IT sector is concerned, and this is actually getting linked to the global technology correction as well. There is a lot of talks about recession and the impact of that. I think what is known today is that surely the global economies are going to slow, but what is sort of unknown is that what beyond that. I would imagine that technology spends are likely to continue. Maybe there could be slower growth, but the growth itself will remain. Good part is that because of this correction, the valuations have become more palatable, is what I would say. The next 6 months, when the noise around the recession slowdown is high, and let's say the stocks tend to consolidate or weaken more, I think that probably should be a good opportunity to keep accumulating and enhancing your weights across the IT sector is our view.
Hi Vinit, morning. Since IT is the big theme, I wanted to ask you, what about your preference out there? The large cap names or the mid cap IT companies? In the past, I think Cyient is a stock that you've liked. I think even eClerx is something that both those two are relatively cheaper in comparison to the pack. So what would your preference be from the IT space itself?
So I think overall, in terms of preference, I think there's a neutrality wherever we find value. Even within the large caps, we have chosen to be with names where we see the opportunity to be decent, and the valuations were relatively, not as expensive as the whole pack. But now the good point, as I mentioned, is that the whole pack, both the large caps and the mid caps are correcting, which is providing opportunity across the board, is what I would say. Okay. But one should not sort of very aggressively buy into the names right now. I think give it a good time period do an SIP type of investment in these segments is, I believe.
Vinit, financials, what is the view? That is a one consensus overweight. Valuations are also below longer-term averages. As a sector, is that the top overweight for you?
Yes, absolutely. I think this has not changed since the last time also we spoke. Financials have remained pretty overweight for us. I mean, and I think given the macro recovery, which is holding up well as far as India is concerned, I would say the banking sector, which has cleaned up the balance sheet, they are ready to lend and grow, some bit of this rising interest rate also helps these banks in terms of their profitability as well. So I would imagine that when one looks at the profit table across the sector, the banking is the one which is going to add the most in terms of the profit growth over the next 1 or 2 years. And from that perspective, the overall stock valuations are also not on the higher side, is what I would say. So the banking pack also looks sort of pretty okay, and we are quite overweight as a house as well.
Okay, I just had a follow-up on the IT discussion. You said that the valuations have become more palatable in the IT space and you would accumulate IT through the SIP route. I guess that's the best way to do it, considering that, towards the year end we could be heading into a recession. But would you stick with the large cap IT names, or do you think the mid cap names? And under that umbrella as well, there are so many different kinds of stocks, right? There are the auto-related IT guys, whether it's KPIT Techs of the world, Tata Elxsi. Where would your preferences lie?
See, actually, we are looking at both the category, and I would say that mid caps have also corrected a lot more in the last few months, and which is where, like you said, there are specialized mid caps, is what I can say. Some of them focusing on auto, travel could be a good vertical, as it is opening up now. Similarly, there are niches which some of these companies have carved and ventured into, engineering skills and all of those. So I think these are something which basically gives them a good, let's say, moat over the next few years, and also the opportunity to grow. And the valuations, as I said, are okay. So I think it should be a combination of both some large cap names. The mid caps, where I can say that they are catering to specialized category, those can also be looked at, given the valuations are getting on the reasonable side.
Okay, all right. Vinit, what about the healthcare space? Do you believe that's going to be a sector that you like to buy, maybe on dips? The pharma index, in fact, hasn't done much in the past many years. So how do you approach the space? Will it be the diagnostic companies? Will it be pharma? Or do you believe there is still more pain before you get in?
So I think our focus has been on the pharmaceutical companies at the moment, because those are the ones which have been lagging. And to me, it is more of a price performance, and the absolute performance. Maybe there is some bit of pressure right now, but I think these are beautiful companies generating good amount of cash, distributing dividend to the shareholders, and working with a very decent capital efficiency when one looks at their ROC and ROEs. Just in the cycle, I think the businesses today are facing some challenges in terms of the higher raw material price and all of that. Those, I think, in the next 1 year or so, we'll see a very different scenario where some of these inflationary pressures would surely recede, and also the US markets, which have been a bit slower, should also start providing them opportunity. And good part is that all of this is not baked into the valuations today. There is a good amount of optionality which can get created when we look at the sector at the current level. So I think we are pretty positive on the healthcare sector. And as I said, for IT, I think for healthcare also it makes a lot of sense to keep accumulating the stocks here.
Okay, Vinit, we'll leave it at that. Thanks a lot for joining in, and a very helpful discussion.